Quickly, I wanted to show what I actually do when I am trying to share IML. It's been helpful for me. Uh, I find that when we provide value, it goes a long way. Oftentimes, people don't even know about IML until later on. And so I try to provide value on the front end and then show them where I have obtained the value. Okay. And so one of the things that I do essentially, and I'll try to do this really quick, I do it a lot slower when I'm actually talking to someone, but a lot of times what I'll do is I'll come to the chart just like this. And what I'll do is I'll come on here and I'll talk about how sometimes people believe that the market kind of just moves any kind of way that essentially it wants. And I like to show them that the market has things I like to think of as ceilings and has things I like to think of as floors, and that the market really likes to go places that it's been before. And as people that participate in the foreign exchange markets, we study these candlesticks and things that you see here. These red and green lines are candlesticks. We essentially just need to look at an area where price is at and determine whether we think it's going to go up or down. And so simply, a lot of times we'll look for areas, like I said, that are floors, right? So we'll find an area like right here. That's a floor where price came to and turned around. I'm going to turn it yellow so you can see it a little bit more. Right? Price came down to here, hit this yellow line and went up. Over here, it kind of struggled around this yellow line and went up. Kind of came around this area and went up. Here you can see it went up again because price likes to go to places it's been before, right here, right? Also, we can look over here and see that price has areas like this as well. And we like to think of them as zones, not really a hard line, but an area. Right? Where price came up to and turned around. Price came down and went up. Price came down and went up. Price came down, went up. Price went up to, right? I live on a second level of a building. I have a ceiling and a floor. Well, my floor is also a uh, a ceiling to the level underneath me. Okay, for my neighbors underneath me, this floor that I'm standing on, if I jump up and down, may make them irritated because this is their ceiling. Now, it's the same thing with price. Price can have an area that represents a floor right here, floor, floor, floor. But over here, it could be a ceiling, a place where price went up to and hit, right? Same thing with this area right here. It's a floor, it's a floor, it's a floor, it's a floor. And over here, it's a ceiling, all right? And in the foreign exchange markets, what we do is we buy and we sell. So buy, for the simple sake of explaining this without giving you a full out course, just simply means that we expect that price is going to go up or rise. Sell just means that we think price is going to go down or drop from the location that we're looking at right now. Okay. And when we do that, we have to pick a lot size. Okay, a lot size is what we have to actually put into our application when we make that decision. There are three different lot sizes that you have to essentially know: a micro, a mini, and a standard. Okay, a micro is valued. A micro is valued at 10 cents. A mini is valued at $1, and a standard is valued at $10. Okay, so whenever I come to my software to trade, I have to utilize a lot size. Okay, now price. One of the things that's important for us to understand is that when we are essentially looking at price and talking about price movement, we essentially don't describe that in dollars and euros and yen. We don't say that it rose $10, it went down $7. We don't say that it dropped 10 euros or it went up 10 euros. We actually use a different word. And for instance, like if I was to tell you to go put some sugar in the pot, you would say, what? How much? If I told you to go run far, you would say, how far? Well, I would say go run 12 miles, right? Or go put 1 cup of sugar in the pot. That cup or that mile or that inch, that is a unit of measurement. And in the foreign exchange markets, we have a unit of measurement called a pip. Pips are our unit of measurement. All right. Now, what happens from there is, let's say, based on history, because one of the things that we do is we look at these charts and we know that price likes to do things that it has done before. There's a high probability that if price has done something one time, that it may do something another time. All right. And so when we look at these areas and look at these opportunities in the market, we look for areas where price likes to do the same thing. So for instance, right around this area right here, if I was to see price right here in this spot right here, this area right here, if I was to see price one time come off of here, when it comes around here, I'm expecting it to come up from this area, right? And let's say I happen to see this happen. Price come right here and hit. Well, from here, if I thought it was going to bounce up, I essentially would press buy, and I would have to choose a lot size. All right. And when I choose that lot size, it's now going to move in a certain direction. And let's say I happen to take it all the way up to this area. Why would I have taken up to this area potentially? Because I know that over here, this was an area that was a previous ceiling and floor. So this may have been one of my targets. And so based on this calculation, this would have moved approximately 139 pips. That's the unit of measurement that we say. Again, I'm not going to say $139. We'll say 139 pips. So in this move, it would have went 139 pips. Okay. This buy on USD JPY, 139 pips. Now, all you have to do is then take whatever lot size you chose for the trade and multiply it by the pips. Okay, so if you use the micro, you would multiply that by 139, right? By 10 cents. 10 cents times 139. If you use the mini, you'd do that $1 times 139. If you had a standard, you'd do $10 times 139. All right. Now, one of the things that we highlight, one of the things that we stress is proper risk management. Okay, proper risk management. Because everyone would want to use obviously a standard, but you cannot just use a standard if your account size does not have the ability to use it. All right. And so we stress here at iMarkets Live proper risk management. All right. Whenever we're taking a trade, we typically, when we're trying to be conservative, will try to stay around 1% risk per trade. So if I had a $1,000 account, I would only risk $10 on my trade. How do I control that risk? I control it with a stop loss. All right, I control it with a stop loss, meaning I will put on my app a place where if price gets to $10, it will take me out of the trade and I won't lose any money. All right. And so it's important for us to understand, it's important for us to educate, but I just wanted to really give you as an example of how I educate them about what we do. I don't make any income claims. I don't make any guarantees or promises. I just give education. No one can argue that I didn't just right now educate. I didn't make any promises. I stated things that were facts. That the market moved 139 pips. These are the decisions that we make as foreign exchange traders. We have to use lot sizes. We can pick them. IML teaches that proper risk management when you're being conservative is 1% per trade. And those are facts. Something else I may do is I may come over to the harmonic scanner and I may show them the tool that we have access to. So we'll have a scan that comes out. Harmonic scanner. We click on it and I may actually teach them the rules. I'll educate them on what we would do. Alright, and again the same thing. I show them what the stop loss would be, what the entry would be, what the take profits would be. Alright, I usually don't make, not usually, I don't make income claims. I just educate. And IML can't really say that we're not being compliant, essentially because that's what IML Academy does, is it educates. It's going to teach them how to use the harmonic scanner, show them where their stop loss, their entry, their take profits are. They're going to teach them about lot sizes. They're going to teach them about proper risk management. They're going to teach them about pips. And so I just do that on each of my opportunities, and even in my presentations, I just educate. All right, I just educate. So this would be an example of a buy signal. The D's on the bottom. This is a reversal pattern. I talk to them about things like that, and make these our targets. Okay, and I let them know that we don't take every single scan. We come over here with the education that we have, and we make our own decisions based on the tools that are in front of us. And again, just don't make income claims. So I hope this helps. I could be completely wrong. This is not an official video from compliance. So they could say, Chuck is tripping, this is not what you should do, but I really don't know what else to say. I'm educating. As an educator, essentially, I'm sharing with them education on IML tools like the harmonic scanner, and I'm educating them about basic concepts like lot sizes, like risk, like pips, like ceilings and floors. I use ceiling and floor instead of saying support and resistance. All right, so hopefully this helps. I'm not sure, and feel free to comment.